Hey guys, John Paulomy here, Actionable Intelligence. Today is Saturday, April 20th, and this is the weekly market update. So, I want to kick things off with a headline I saw this week in Reuters, and it was China goes all in on homegrown tech and push for nuclear dominance. So, there was some speculation a few months ago in the uranium Twitterverse, if you will, that the Chinese were going to stop their nuclear build out, that they decided not to build any more nuclear reactors. In fact, what they did was they had a pause or a hiatus on building reactors because they were using a lot of foreign designed reactors. So what the Chinese have finally done is they've come up with their own reactor design, and there was a pause in building and announcing new reactors because the decision was taken to use the internally designed Chinese reactors. So we've seen the recent announcement that the Chinese plan on building 6 to 8 reactors per year for the next 10 years. These will be Chinese designed reactors, and they also are going to be making a push to export their technology. The Chinese, when they decide to do something, it can result in a huge amount of money being made. They are not encumbered, the Chinese Communist Party being them, are not encumbered by having to respond to public opinion or the views of dissidents or people in minority positions like in the US or in Western Europe. They have decided they're going to build these reactors. The reactors are going to be homegrown. They are going to export this technology. This has tremendous, it's going to have a tremendous effect on uranium demand over the next decade. The Chinese do not have a domestic uranium production capability. Therefore, if they're going to build this number of reactors, if they are going to export the technology, if they are going to build reactors for other people and operate them and fuel them, then I can tell you that they are going to accumulate a significant amount of uranium in order to allow them to do that. You know, we've talked about this before. Other people have talked about it all over the Twitterverse, uranium Twitterverse, if you will, that this is not uranium and nuclear fuel production is not a just-in-time inventory situation. You need initial loadout is 3 times for a new reactor. The initial loadout is 3 times the amount of uranium that is consumed per year. You then do a refueling every 18 months of a year to 18 months, a third of the fuel is replaced. And if you're somebody like China who's going to invest heavily in a domestic nuclear industry, you're going to make sure that you have a sufficient amount, talking about years of supply, in order to ensure that there's no disruptions. So you couple this with the fact that there's just been insufficient amount of investment in new uranium mines, and I fully expect over the next year to 18 months you're going to see massive amounts of Chinese investments and takeovers, if you will, or joint ventures with mining companies to make sure that they can ensure their forward supply. So I think I'll put a link to this article, but you know, anytime the Chinese say they're going to do something and they commit to something, it's an actionable investment thesis. So that's why I think this is really a big turning point long term for uranium investors. It's just the market is so small, and then the Chinese getting involved, it doesn't even count the Indians, the Russians, all the other people that are considering building reactors. So definitely going all in, China is, and this is going to have significant impacts on future uranium demand. Now, I get on this kick where I like to try to find the best investors of all time, research them, learn from them, because you can't think everything up yourself. It's best to go find, if you want success in a field, you should go find the best in that field, study them, and then try to emulate the characteristics that made them successful. A lot of people talk about Buffett as being the greatest investor, but there was another guy in that same time frame that was a student of Ben Graham. His name was Walter Schloss, and I've been studying him for the last month or so. There's a website that just has all about Walter Schloss. He worked for Ben Graham for like 9 years, and then he went out and started his own firm. And basically, he didn't really do a lot of interviews. He didn't really draw a lot of attention to himself. He just compounded capital at 16.4% on an annual basis for 32 years. That puts him in the upper tiers of investment managers of all time. Buffett said this about Schloss: he knows how to identify securities that sell at considerably less than their value to a private owner, and that's all he does. He owns many more stocks than I do and is less interested in the underlying nature of the business. I don't seem to have very much influence on him. That is one of his strengths. No one has much influence on him. So Walter Schloss came up with about 10 or 15 rules that he used for investing for success. And what I have done is I've taken some of those applicable rules and I've applied them to uranium speculation and investing. What I'm seeing a lot is, and I've talked about this before, is a lot of people are hand-wringing. They're constantly, what is going on with uranium? How come it's not moving? And I think going over some of these rules and some of these ideas that Walter Schloss had as a distressed and contrarian investor and a value investor is applicable to the current situation in the uranium market. And I wanted to take some of his rules and apply them where they were applicable to uranium investing. And hopefully you'll be able to get something valuable out of this. Because the bottom line is this, guys: whether it's myself, whether it's people on Twitter, Mike Alkin, whoever, CEO of your favorite uranium company, no one knows when the market's going to turn. No one knows the catalyst. All we can do is line up as many of the factors in our favor, and if they give us a high certainty that an event's going to take place, i.e., in this case, that the uranium price is going to move higher, then we put our chips in the table and we go for the ride. So let's go over some of these rules and how they may be applicable to the current situation in the uranium investing sector. Rule number 1: price is the most important factor to use in relation to value. So, the people that bought uranium stocks and uranium during the last cycle at $140 a pound, they were the bag holders. So price is relative to value. And as a contrarian, as a value investor, we look at the fundamentals of uranium. We see that there's been no investment. We see demand's increasing. We know the story. So the stocks for these uranium companies are at all-time lows just about. They are at relative to where they were in past cycles. So price is low, let's put it that way. That's that in relation to what the potential value is for a commodity that is required to produce 11% of the world's electricity and 20% of the United States' electricity. Rule number 4, have patience. We've talked about this before. I mean, there's a lot of hand-wringing, like I said. There's a lot of consternation. People are nervous. They put a lot of money in this. They bought the story and say, why isn't anything happening? Guys, you just got to have patience. No one knows, okay? Are there any new mines coming online? Where's this big, wave of supply coming? We see the reactors being built. You can track that. You can put a spreadsheet together. You can see where the demand's coming from. I just talked about what the Chinese are going to be doing over the next decade. I mean, you can see it. You have to be patient. You have to sit tight. There's other things to do right now. Summer's coming. Baseball season started. There's, time to, think about going up to the cabin and go fishing. There's a lot of other, go talk to your wife, go play with your kids. This is going to happen. Just be patient. Rule number 6, don't be afraid to be a loner, but be sure that you are correct in your judgment. You can't be 100% certain, but try to look for weakness in your thinking. Buy on a scale and sell on a scale up. So what he's saying here is that right now we are loners. I mean, yes, we have this tight-knit community on Twitter and places like this, John Quakes, myself, all these different people, that Uranium Insider, all these people that we all follow. But it's a small group of people. No one in the general investing class cares about uranium, knows about the story, and they're not going to care and know about it until it starts moving up. But this is the quintessential factor that creates life-changing wealth. We are second and third level thinkers. Of course the momentum people are going to come in. When your ex-brother-in-law is at Christmas, is at Thanksgiving dinner in a couple of years bragging about how he's in uranium stocks, that's going to be the time to sell. It's on the front cover of Barron's when everybody on CNBC is talking about it. That's when all the big final push, when all the bleacher bums and shoe clerks come in and push the thing up into a frenzy. Okay? Being a second or third level thinker means being early, means being a loner, it means swimming upstream. That's what it means. And that's the whole thesis of my thinking as a contrarian and as a value seeker. Okay? I expect to be one of the only people that sees what's going on. I expect to be, not in the mainstream, to be a loner, if you will. So what do we do when we're talking about buying on a scale? So people ask me, what am I doing? Why do I, if the stocks aren't moving up, and aren't I concerned? No, I'm not concerned. What I continue to do is put new money together and scale into additional positions. I've told you before that I think this is going to be the greatest wealth creation possibility. It's going to make Bitcoin look like, money market returns. The world is moving to nuclear power. That's a simple fact. You have billions of people in the Far East, in China, in India, that require tremendous amounts of electricity. They're literally choking on coal particulate matter. They have no choice. I mean, there's 300 million people in the United States, and we produce the most power of any country with nuclear power. And that's only 20% of our power. If these people go to 20 or 30% of their power over the next 25 years, there's just simply not enough uranium currently available. Yes, when the price goes up sufficiently, tremendous amounts of capital will come flowing in, and they will find the requisite uranium. And that's the opportunity, guys. And if you got 1,000 shares of energy fuels, yeah, you'll make a few bucks. But I'm talking about scaling into good positions, building the positions while they're cheap, because I think the regret that many people are going to have when this thing eventually goes where I think it's going, they're going to look back and say, man, I wish I would have bought more shares. Now, I'm not telling you to go mortgage the house or take cash advances on credit cards. What I'm saying is if you have a plan and you just steadily buy. This is what I did with the gold market in the late 1990s and early 2000s. I just kept stacking. They call it stacking. Just kept, go down to the coin shop every week, payday. If I had extra money, I'd go buy, some more silver, some more gold, and just kept stacking. Kept buying good, decent mining shares of good companies. And over that bull market, over the subsequent 12 years or whatever it was, when 10 or 12 years, when gold went from about $250 an ounce to $1,900, there was a lot of good money, 10 baggers, 5 baggers, lots of doubles and triples on the way up. So one of the things I think we need to do, though, that goes in conjunction with Rule 6 is what I call red teaming. So I'm a military historian. I enjoy playing war games. I read a lot about different battles and military engagements. And one of the things that militaries do is when they are strategizing, they put together another team, a red team, and takes the opposite and tries to battle war game and try to figure out holes in the plan that's being projected. And a perfect example of this, which I think is famous, is in the movie The Longest Day. You can check it on YouTube. Is about General Erich Marx, who was a German general who was the original planner for Operation Barbarossa, the invasion of the Soviet Union. The shows the video, or in the Longest Day, he is planning to do some war games, planning, being the red team, and go against the Germans as the Allies. He takes the Allies side because the German high command thought that the invasion would come across the shortest part of the English Channel to Calais in good weather, and General Marx said that no, it would come to Normandy and be in bad weather, and he was eventually proved correct. So what we need to do is kind of do the same thing. We need to red team. We need to see what our plan is and what are the possibilities that could wreck our plan or disrupt our plan. You know, we have some very easy ones, okay? We could have another nuclear accident. That would set everything back for years. Like Chernobyl or, Fukushima. We could have a psychotic break in the world economy, and everything's going to go down in that environment. I don't care what it is. Everything will go down. That would set us back a couple years, several years possibly. We could have missed all the numbers, and there actually could be way more uranium than we ever thought there was. These are things that when I'm saying red teaming, these are the things we need to take into consideration. We need to balance our bullishness with what is on the other side that could wreck our plan. Mike Tyson said, he's famous for saying a quote about planning for his boxing matches, or for any boxer. Everybody has a plan until they get punched in the face. So what are the possibilities? And it's good to think about these things and red team against your plan to make sure that you understand the bearish case, make sure you understand the things that could go against you that could wreck your plan, because nothing's 100% certain, not even this. We put the odds in our favor. That's why I like these poker analogies. We're dealt a certain hand that we know on a percentage basis, if it played correctly, will yield us a profit. Okay, and we know the combination of cards that don't get us there. We know the combination of cards that do get us there. We think we're lined up here, but that doesn't guarantee that this is going to work. This is going to work out the way we want to, or to the extent we want to. So it's good to red team and plan against the what could happen, or look for the cracks in our thinking. Okay, Rule 10. When buying a stock, I find it helpful to buy near the low of the past few years. Okay, and it just goes on to talk about attractiveness of different stocks, but that's what we think we've done. I think we're buying at nearly all-time lows or maximum pessimism. I mean, definitely a lot of these stocks are still, blown out, bombed out. Can they go down some more? Yes, they could, but I think that, we're near the lows here. I've seen even Paladin dropped some more the other day on the Australian exchange. I don't look at that. I don't, throw my hat down and go stomping off. I say, well, I got some cash available. I'm going to pick up some more shares. That's how I look at it. So Rule 11, try to buy assets at a discount rather than earnings. Buy assets at a discount rather than earnings. Earnings can change dramatically in a short time. Usually assets change slowly. One has to know how much more about a company if one buys earnings. So that's what we're trying to do. We're trying to identify and put a value on these different companies, whether they're previous producers or developers. What are the assets they have? What are they currently worth? And what would they be worth at different dollar values of the uranium price? At 50, at 60, at 80, at $100 pound uranium, that changes the value of the assets. Some of these companies like Paladin and Energy Fuels and Boss and some of these other ones are past producers. Cameco, at what price would MacArthur River come on, and what price, what would their profitability be? What would the earnings be? These are exercises that we need to take into consideration, because these assets become more valuable, obviously, as the uranium price increases. And I go back to, so summing up the uranium thesis as it applies to some of the ideas that a great investor like Walter Schloss put forward is to find a basket of the cheapest uranium stocks with the greatest margin of safety. And when I say margin of safety, because a lot of these are developers and a lot of these are speculations and a lot of them are, just pounds in the ground, we're looking up for cashed up companies with legit management teams. At the peak of this thing during the last cycle, when uranium was $140 a pound, there were over 500 uranium companies. Does anyone think that there were actually 500 competent uranium teams out there? No, they weren't. I would say that there's probably 10 to 12 competent uranium teams out there, even at the current level where you only have 30 or 40 stocks. Not all of the companies have competent uranium teams. Yes, they have properties that they're marketing. You can talk to any CEO at any of these mining conferences. You can look on any presentation that they put out on the internet, and it's going to be unicorns and Skittles, to the end. But do the people that are running the company, have they been through previous uranium cycles? Do they understand the uranium market? Do they have competent engineering people and geologists that focus on uranium? And are experienced in uranium mining and exploration. These are the things you need to look for. And cash, like I've said before many times, is how much cash do they have? Do they have enough cash to survive and keep the lights on without continually diluting you? I mean, if you just keep diluting, and this thing finally turns around, I mean, what's really going to be your payoff? That's what you have to ask yourself. And in a decent location. I mean, there's a lot of people that think the Athabasca region is the only place in the world that is legitimate. I don't necessarily share that. I think there are good companies there, obviously, but I also think there's tremendous opportunity in West Africa. Namibia is a known uranium jurisdiction. The government there is stable. It has a history of uranium mining. They do not have an issue with uranium mining there. The permitting processes are well known, and the government's friendly. Same thing in Niger. I mean, they have some issues with some insurgencies, but Areva and some other companies there have been operating there for years. And you always have the backstop of the French Foreign Legion and the French Parachute Corps. I mean, if it gets too out of hand, they'll send them in. So that creates additional risk, but what is the risk? Where are the Chinese going to go? Where are they going to go to get the hundreds of millions of pounds of uranium they need? They don't have it. The Kazakhs have it, but they're in the sphere of Russia. So yes, they'll supply a certain amount, but they can't supply all of it. So, I think that some of these places actually have additional upside with some quantifiable and additional risk. So I think you need to take that into consideration. Then you need to allocate a specific amount of your portfolio to the basket of stocks that you've identified, and then forget about them for 1 to 3 years. Go take your kids to Disney World. Go fishing up at Mille Lacs, go see a ball game, go take a walk with your wife. I mean, go live your life. Rubbing your hands together, I don't want it to sound this too bad. I don't want it to sound as a criticism. Sitting around smelling your own farts about a 1 or 2 cent change in a uranium stock, like I see a lot, is counterproductive, guys. If you've done the work and you understand where we're going and you've allocated sufficient capital, then you just have to wait. And like I said, red team this thing. What are the downsides? Follow the news. What are some of the catalysts? If things don't pan out or things go against you, you got to be prepared to move out. If we have a nuclear accident over this weekend, then, I guarantee you it's going to set back this whole scenario 3 to 5 years. Okay? It's an inevitability that uranium and nuclear power is going to become a bigger slice of the world generation capacity. It simply has no choice. This idea that we're going to go from more dense energy sources to less dense, in the history of the man, that's never happened. What I'm talking about, we're not going to power the world with renewables. I'm not even going to have the conversation anymore. I made a video about it, and I got some negative emails from people that are like, well, no, I do know what I'm talking about, actually, because it's a math and physics problem. And, people that aren't encumbered with weird ideas like we are in the West, like the Chinese and Russians and people in Bangladesh and in India that are living in reality, that have to get hundreds of millions and billions of people out of poverty. And how you do that is supplying cheap, reliable electricity via nuclear. that's clean. I mean, you can't just keep burning coal, okay? Not because of the CO2, because the actual particulate matter and the smog, okay? They see it, they get it, they have to do it. It's coming. So even if to get to 20% of their grid capacity with nuclear, I mean, doubles, triples, quadruples, who knows? I mean, I haven't even done the math. It's huge amounts of required uranium. So that seems to be what's going to happen. So you just got to forget about it. It's going to turn. I don't know when, but, you know, if you have to sit for 3 to 5 years to wait for something to go up 10, 20, 30 times in some of the cases with some of these companies, I'm sure that's going to be the case. Isn't that worth it? What's going to be your annual return calculated? So, you know, if you can take $10,000 or $20,000 and possibly turn it into $500,000 or $1 million, which I think is possible, then, you know, you don't want to wait a couple years for it to pan out. So, you know, that's why, you know, this final discussion point here, the plan itself is simple in theory, but like all of Schloss's rules, they're hard to follow. And that's what it is, this mental stumbling block people have. You know, I keep seeing it a lot. I don't want people to get discouraged. I don't want them to sit around and just lament and hand wring about, you know, 5% changes in the uranium price. Oh no, the spot price. Who cares? Okay? Who cares about the swoop price? This is going to happen. Just be patient and calm. Okay? Go live your life and just keep nibbling away on the good companies that you've identified. So that's my spiel for this week. I hope that was helpful. Hope that we'll see some comments and criticisms. Happy to take them. Feel free to hit me up in the comments section. We're doing a lot of good work, I think, in the Actionable Intelligence Alert newsletter. It's available for $79 per year, 12 issues. I'm going to be identifying some additional uranium stocks. I already have a small portfolio in there. I'll be adding another one this month, or the May issue, that I think has excellent opportunity going forward. And, you know, if you want to support me, please take a subscription. If you don't care to take a subscription, just follow me on these YouTube videos and hit the subscribe button. That does help me quite a bit also as we get the word out and attract more listeners and watchers of the videos. So that's it for this week, guys. I wish everyone a happy Easter. Take it easy with your family, recoup, rejuvenate, and we'll talk to you next week. Thanks.